In today's video, I'm going to share with you a powerful scalping strategy that is designed to take advantage of quick moves within the first hour of market open. This strategy is based off of one candle. It's repeatable, very easy to identify, and the best part is it's simple to understand. And with that being said, let's not waste any time and let's get straight into the video. So as you can see, I've made over $94,000 in the past month trading. And right here, this is my P&L graph spanning the past 30 days as I'm recording this video from July the 6th all the way to August the 6th. This is by no means a normal month for me. This is a great example of what can happen when you have great opportunity in the markets along with proper sizing. This really shows that all it takes is a couple good setups that can make your whole quarter. So in today's video, I'm going to share with you how one candle in combination with other concepts that I've taught on this channel can create a very powerful trading strategy. And what is this strategy slash concept? And the strategy slash concept is all reliant on one candle. And what we're going to focus on here is up close candles, which are green candles, and down close candles, which are bearish candles. And all we're doing is looking for up close candles to be respected in a downtrend and down close candles to be respected in an uptrend. And that's the basics of how price moves. Of course, we're going to go into more detail. We're going to talk about confluences, the different types of higher time frames, along with setups that we can use in combination with the one candle. We're then going to talk about entries, stop targets, different types of entry models. Where should we place our entries when we're talking about the one candle, along with examples, of course, at the end of the video. So what is the one candle slash order block? So I personally call it order blocks, or some people call it the one candle. There's a bunch of different names for it, but all we have to know is that it's going to be a down close candle in an uptrend and an up close candle in a downtrend. An order block is an area where large market participants have placed significant buy and sell orders. Order blocks are key levels slash areas where there's lots of liquidity on the chart. Institutions and market makers will place their orders in these areas of significance. So with this being said, we understand that order blocks are going to be key levels on a chart. So we really want to know how to identify these key areas and levels to be able to identify potential trading opportunities in the markets. So number one, if we want to identify our one candle slash order block, what we want to be looking for, number one, is a trending market. So a trending market in this case is going to consist of higher highs, higher lows, higher highs, higher lows. So we either need an uptrend or we need a downtrend in the markets. What we don't want is where price is consolidating in a range. There's also different types of order blocks, which are reversal order blocks. Strictly in this video, we're going to talk about my personal favorite, which is going to be continuation order blocks. So that's number one. Number two, what we want to do is mark out any sort of down close candle that is in a uptrend. So in this case, you can see we have a clear uptrend towards the upside. Now what we're going to be doing is marking out down close candles. So you can see price has a nice push towards the upside. Once we close below our down close candles, what we can do is mark out from the wick to the body. That's the easiest way to identify an order block. You can see price pushes higher, respects our down close candle. Once again, we have another push towards the upside. So once we break above this down close candle, we can mark out the wick to the body once again, and you can see price respects this and continues towards the upside. So all we're doing is marking out down close candles in an uptrend, and when we're in a downtrend, we're going to be marking out up close candles. So we're doing the exact opposite. You might be asking, there's so many down close candles in an uptrend, which one should we choose and which level should we trade off of? So what we want to do is mark out down close candles in an uptrend. So on the left hand side right here, what we have is our highest probability to our lowest probability order block. So in this case, what we're going to do is mark out the area from the wick to the body. A lot of people always ask, do I draw levels from the wick or do I draw levels from the body? And the right answer in this case is we're going to draw out the whole area, right? Because sometimes price will respect the wick, sometimes price will respect the body, but in this case, it's this general area that price has to respect for continuation towards the upside. So as long as you can maintain this area, right, we can expect price to move higher. So this is going to be our highest probability order block. The actual order block in itself is the full down close candle, but you'll see the highest probability is going to respect from the wick to the body. The second one, so in this case, what we have is a very small wick. When this is the case, when price has a very small wick, we want to give it a little bit more room. So instead of marking marking out from the wick to the body. We're going to mark out from the top of the wick all the way to the bottom of the body. So in this case, this is our second highest probability order block. What we want to see in this case is price respect this for this continued push towards the upside. And then on the right hand side, what we have is our lowest probability order block when we have a full down close candle. This is where we draw it from the top of the body down all the way to the bottom of the body. And this is where when price gravitates higher, right, we have no wick. So price can bounce either at the top, it can bounce in the middle, or it can bounce all the way at the bottom of the order block. So that's why this is the lowest probability, is because it can bounce anywhere in this general area. Whereas if you have a highest probability order block, you want to see it bouncing at the top of the wick all the way to the top of the body. So this is what's classified as our bullish order blocks. As I mentioned, we're looking for down close candles in an uptrend, and we just went from the highest probability down to the lowest probability order block. And what does this look like here on a chart? So what we're going to do is mark out down close candles in an uptrend. So as you can see right here, this is the first down close candle. You can see price respects from the wick to the body. Nice continued push towards the upside. We can mark out our next down close candle. When we close above, you can see price breaks above, respects the wick, has a very strong push towards the upside, and then we can mark out our next down close candle. In this case, we can draw our full candle. Of course, we want to see price respect the top of the wick to the body. We were respecting it. Once we broke back underneath, we actually gravitated towards the low of the order block. The low of the order block held, and you can see eventually we gravitated towards the upside. So if we can hold the top of the wick to the body, that's when it's going to have the most momentum. If we gravitate all the way down towards the low of the order block, we're still bullish, but that just means it's going to take a little bit longer to gravitate back towards the upside. So you can see here, price pushes back higher, and we can keep marking out these down close candles, and then we can see price ends up continuing back towards the upside. Now let's take a look at the opposite, which is up close candles in a downtrend. So when we're in a downtrend, we're looking for up close candles. On the left hand side, we have the highest probability. What we're going to do is draw it from the wick to the body once again. This is where we want to see price respected. So if you close underneath, you want to see the retest and hold underneath this order block for continuation towards the downside. In the middle, what do we have here? We have a very small wick. So what we're going to do is mark it out from the bottom of the wick to the top of the body. Once price closes underneath, we want to see continuation towards the downside. So that's what we have for the one in the middle. And then for the one on the right hand side, which is our lowest probability order block, we're going to have to draw it from the bottom of the body all the way to the top of the body. Price closes underneath, then we're going to be using this as a retest level for continuation towards the downside. What does this look like on a chart? In a downtrend, what we're going to be doing is looking for up close candles. So we can mark out this opening candle here from the wick to the body. Price closes underneath, and you can see price respects and continues lower. The next order block that we have drawn out is going to be this up close candle right here. So we can mark this out from the wick all the way to the top of the body. Since we have a very small wick, you can't even see it. I can barely see it. So we're going to draw out the whole body. You can see price respects it nicely and continues towards the downside. The next one, we have this up close candle. This one has a pretty big long wick. So we can mark out the bottom of the wick to the bottom of the body. You can see price closes underneath, retest, continuation towards the downside, and so on. And you can see exactly how this works. It's the exact same thing to the upside as the downside. And in the downside case, we're looking for up close candles to be supported for price to continue lower. So now with the basics of order blocks down, let's talk about the confluences, entries, stops, and targets when we're using order blocks in the one candle rule. So now let's talk about entries, stops, and targets. Of course, this chart is in hindsight. I already know what's going to happen, but we're going to talk about some examples here in a second that I did take in real time. So first things first, what we're going to do is mark out down close candles. So you can see our first candle, once we broke above, immediate retest, continuation higher. Another retest that we have, we can mark out from the top of the wick down in towards the body. You can see price respects, retest, and we have continuation higher. So let's say, for example, we're looking for an entry on this down close candle right here. Maybe you had some other confluence like your previous day highs, or maybe this was your 5-minute range candle here. So what we're going to do is draw out our one candle or order block in this case, which is our down close candle. Where we can have our entries placed is at the top of the order block. You can place it at the middle of the order block, or you can place it at the low of the order block. In my opinion, the best place to place your entry is going to be at the top of the order block and the middle of the order block, which is going to be at the body. Sometimes if you place at the body, it might not always get filled and price might continue higher. So the easiest way is to place it at the top of the order block. So this is where your entry is going to be. Your stop is going to be a break below the bottom of the order block. And then your targets, you're going to be looking for high day plus continuation. In this case, it didn't offer you 1 to 2. So you're going to be looking for a 1 to 2 minimum for a continued push back towards the upside. So entries, stops at the low of the order block, and then the targets, you can be looking for a fixed 1 to 2. And you can see price ends up continuing towards the upside. This is the first entry that you could be looking for. So after this nice push towards the upside, where is our next down close candle? In this case, what we have marked out is going to be this down close candle. So we can mark out from the wick to the body and we can drag it over. And you can see price actually comes back down to retest this down close candle. Why? It's because down close candles support price towards the upside. If we're looking for a potential re-entry or a second entry in this case, where can we have our entries? We can have our entries placed at the top of the order block. So this is our entry point. We can have our stops, as I mentioned, at the low of the order block. And then for our targets in this case, it's nice and easy. We're going to have it all the way back at high of day. So we have our entries, we have our stop, and we're looking for continuation back towards high of day and above. And this is our risk to reward. This is the best order block in my opinion, just because it has a nice room for this continuation back towards highs. And in this case, you're looking for around a 1 to 3. And this is a very high probability trade in the right context, of course. The best order blocks are always going to occur when we are trading around key levels as well. A 1 minute order block or a 1 minute down close candle is not going to hold as much significance as something like a higher time frame order block or an order block that has multiple confluences. As for the entry stops and targets towards the downside, what we're going to do in this case is mark out up close candles because now we're looking for a downtrend. So in this case, what we're going to draw, you can see price breaks towards the downside. We're going to mark out up close candles. So the up close candle in this case, we can draw it from the wick to the body and drag this over. You can see it's also in combination with our opening range low. So you can see price comes up, taps in towards our key level. If we wanted to look for entries in this case, what we can do is have an entry right at our order block low. Our stop is going to be at the top of the order block, and then we could be looking for low of day and below as our targets. So that's what we can have for our entry. You can see price continues lower, and then the next up close candle is going to be this right here. So this is a lower probability order block just because we have such a big range, as you can see. So let's say we're looking for a potential trade opportunity off this order block right here. Our entries would be at the bottom of the order block. So our entries would be right here. Our stop would have to be at the top of the order block, but you can see how big of a stop this would be only looking for low of day. This is close to a 1-to-1 trade. In my opinion, isn't the greatest. So if we want a tighter stop, what we can do in this case, instead of risking at the top of the order block, we can risk off of your market structure, which is essentially is going to be this candle that took out liquidity. So if I remove this really quickly, we can have our entries at the low of the order block. We can have our stop, which we can make it a little bit tighter. And then we can be looking for low of day, which would be a 1-to-2 risk reward ratio. You can see trades would have ended up playing nicely back towards the downside. So with this being said, we have identified our up close and down close candles, and why in a downtrend, up close candles are going to support price lower, and why in an uptrend, down close candles are going to support price higher. So with this being said, I have a few key notes for you guys to remember. In an uptrend, price will respect down close candles. In a downtrend, price will respect up close candles. The best trades will occur around key levels, being your previous day highs and your previous day lows, plus your opening ranges. More confluence is the better. Of course, if we have an order block in combination with your opening range, or if we had an order block in combination with relative strength or a higher time frame level, those are always going to be the best order blocks to choose. Plus, what we have is unmitigated liquidity. Objective has not been met. So the best time to trade these down close and up close candles is when we have a clear objective that is to be met. If we're chopping around, that is a no-go. We do not want to be trading up close and down close candles when we're chopping because there's no objective, there's no trend in the market. What we need is a trend to be able to trade. The best trades will occur when we're trending. If we're not trending, you want to be very cautious because these up close candles won't support price and these down close candles won't support price either. With this being said, let's now go on to some examples that I took in real time to help us solidify this concept. So as you can see, we're on my first example here. We're on AMD, and as you can see, just based off of its previous day key levels, just to give us a little bit more context, we are bullish because we are above your previous day highs. And now what we like to see coming to market open is really the hold of your previous day highs for potential continuation towards the upside. So let's mark out your previous day highs, and now let's go on to the lower time frames. Let's play with the tape. So as you can see right off the bat here on AMD, you can see we have really nice buyers stepping in off its previous day highs. This would have been a very aggressive entry. So in this case, after this really strong push towards the upside, what are we going to do? We're going to wait for the first pullback or any sort of down close candle, potentially opening range break. As you can see right here, what we have in this case is our first down close candle. This also happens to be our 5-minute range. So we have two things here. We have your 5-minute range. We also have a down close candle. So what we like to see now on AMD is the break above retest. Now it's going to be of this down close candle and also your 5-minute range for continuation towards the upside. So let's mark this out. Let's play with the tape. So you can see right here for AMD, we broke above this down close candle. We're now coming back to retest this order block along with this 5-minute range here as well. What we want to do is wait for essentially the buyers to step in right off here. And as you can see, price tapped right into my down close candle, which was our 1-minute order block. We actually tapped into the body here. This is where I got in as this candle was developing. My stop was a break at the lows. And in this case, what was I targeting? I was targeting high of day plus continuation. In this case, high of day didn't make too much sense. So the next logical level that I had on the chart, we actually have to go back here on the daily time frame, which is going to be all the way back up and towards this key high, which is our 179.77. So this is the key level that I have marked out on the chart. And now we can play out the tape. And you can see right there on AMD, we ended up moving nicely straight up and towards that 179.77. As you can see, price respected our down close candle, which should support price towards the upside in an uptrend. We also held that 5-minute range perfectly. We actually tapped into it once more for that nice continued push towards the upside. You can see this is a great example. I actually ended up taking this trade in real time on AMD for this nice continued push, and we had some continuation as well. Now let's go on to the next example that I have. All right, the next example I have here is on Tesla. You can see so far, if we're looking at its previous day's price action, you can see we're in a clear downtrend here. Now coming into this morning, we're breaking underneath its previous day lows. What we like to see is it maintain underneath your previous day lows for this continued push down and towards your pre-market lows and below. So the levels we can have marked out is going to be this previous day low key pivot point. Now let's go on to the lower time frames. Let's play out the tape. So you can see right here on Tesla, we had that nice pop off the bat, but then we faded back towards the downside. So now we're really looking for one of two things. We're either looking for the retest off of your previous day lows for this continued push towards the downside, or we're now going to wait for the break underneath our 5-minute range low retest of this for continuation lower. Now let's play out the tape. All right, so in this case here on Tesla, we never quite ended up coming back up and towards our previous day lows. So now what we're going to have marked out is our 5-minute range along with this up close candle. So we can mark out this whole general area. This is now going to be used as a potential retest for continuation lower towards the downside, just because this is our 5-minute range plus our up close candles that should be supporting price towards the downside. All right, so you can see price is coming right back in towards our key level. This is where we can go look short. So my stop is going to be a break above this key level. And now what I'll be looking for is your pre-market lows and below. So now this can be our trade setup, and now we can play this out. And you can see right there on Tesla, we end up having a super nice reaction right off our key levels, which was our 5-minute range in combination with our up close candle. So you can see perfect entry with a very tight stop above. And then we're looking for key levels plus continuation. In this case, it was a 1 to 2. We are looking to scale all the way down and towards our next key levels, which was our 298 here as well. So this is a good example of using the up close candles, which is for the downtrend, along with our other key levels and confluences, which is our 5-minute range here. Now let's go on to the last example that I have for us today. All right, so we're on my last example here. We're on NVDA. Key levels we're going to have marked out previous day highs, previous day lows. We're inside of the range so far. So what we like to see for continuation higher, break above your previous day highs for continuation towards the upside. So this is the level I can have marked out here on NVIDIA. And now let's go on to the lower time frames. Let's play at the tape. All right, so as you can see here, we originally pushed lower, but then we had this nice continued push towards the upside. Now we are above your previous day highs. We also have a couple key levels marked out here as well, which is this nice down close candle in combination with your previous day highs. So what we like to see here on NVIDIA is now it maintain above your previous day highs along with this down close candle for continuation towards the upside. So you can see right here on NVIDIA, we're coming right back down in towards this down close candle right here, along with our previous day highs key level. If we want to refine this level even more, we can mark out this down close candle, which is going to be at your 939. The reason why I'm marking this one out all the way down in towards the bottom of it is because this is the one that's most relevant. Plus it's in combination with your previous day highs. So there's actually two confluences here. We have your previous day highs. We have this down close candle. You can see really strong reaction here. This is where I go long with a stop loss at the break below your previous day highs along with this down close candle. And what I'm looking for now is a fixed 1 to 2 plus high day for this continued push back towards the upside. Now we can play with the tape. And you can see right there on NVIDIA, we end up having a super nice hold of that 1 minute order block. Nice continuation towards the upside. I actually came back down once more for another retest, and we end up having this nice continue push back towards the upside. So right there, as you can see, that was another great example of using the down close candle in combination with other confluences like the previous day highs and also the opening ranges. So with that being said, I hope you guys did enjoy the video. I also do have a very exciting announcement to share with you guys in the coming weeks. The goal is to reveal everything that I know about day trading, and the best part is it's going to be absolutely for free. So if you want to get updates on this announcement, there will be a waitlist where you can sign up below. And with that being said, I hope you guys did enjoy the video. If you did, I appreciate if you guys drop me a like and sub, and I'll see you guys next week for a brand new video. Peace.